Hello guys, welcome to today's live stream by Aglogains. My name is Nihant and I'm back with another video after a very long time. So it's been a while. I've been testing out a couple of strategies and I've been focused on my other businesses as well. I will share a little bit about my last year P&L. I'll also talk about how my financial year was, that is year ending till March 31st, 2024. That's financial year 2023, 2024. Options was a great source of income for me for the last year. I'll talk a little bit about, since it's the IT season, I'll talk a little bit about that. But today, the primary focus I want to do is to focus on a option wheel strategy that we are going to implement on a weekly basis. Now, this is a pretty common strategy. Now, the idea behind this strategy is that you have some amount of capital with in your account. So, for example, the capital needed for this strategy would be around 6,40,000, so on and so forth. Another 1 lakh to sell the option. So maybe 7,40,000 is the capital that you guys would need for this strategy. It's a fairly low risk strategy since you are invested in Nifty. That's what we are going to do. Now, the idea is pretty simple. Why you need 7,40,000 is because you want to trade in Nifty Bs and buy Nifty Bs and use options as a method of getting rental income from Nifty Bs, right? So that is how this strategy is going to work. Now I'll walk you through that strategy in a step-by-step manner with a small example. Okay. So what I've done here is I have created a small Excel where we can look at some backtest on 4th of January, 11th of January. These are basically weekly expiries, February and March. We will also do the same for monthly, option wheel. I will show you what that is. And then we can compare, make some notes and see what works and what are our inferences from that. Okay. Perfect, guys. So let's get started. As you guys know, on the right hand side, I have Stockmark, which is the option backtesting tool that I'll be using. I really enjoy Stockmark, and big shout out to Nitish, who's the founder of Stockmark. It's been a great tool in helping a lot of traders. So I've now opened up, if you can see here, I've selected January 1st, Monday at 9:30 p.m. So that is the time that's selected on the screen. Maybe if you just give me a second, I'm going to just move the camera a bit around so that you guys can actually see my screen in a much clearer fashion. All right, perfect. So I think I'm all set. Just give me a second. All right, so I've moved my camera to the bottom, so I think you guys should be able to see this now. Uh, Let me know if it's better, right? So let's get back to this. I'll slowly again we'll talk a little bit more about the uh, monthly option wheel in a while. So that's why I've sort of covered it. So right now I'm talking about 9:30 a.m. on Monday, that is the 1st January. So how this strategy starts off is by you having a capital of 7,40,000 in your account. You don't have to buy anything right away. All you need to do is pick the next week expiry. That's your direct next week expiry, which is basically Jan 4th in our case here, and sell a slightly out of the money put option, right? So, for example, if this is the current expiry, I would just go one strike out of the money and I would sell this put option. Now, what is the logic of selling a put option? If you basically remember all the basics of your options trading, you can see that if you sell a put option, your loss is unlimited. Okay. If the market continues to go up, and your profit potential is limited, right? That is, if your Nifty stays above the strike of 21,650, you basically make profit. All the 87 premium that you've got is a profit, right? So that's our idea. Now, why did I sell a put option? What's the reason? Because if Nifty does fall down, okay, and I have a bullish view on Nifty in the long run, I can actually buy Nifty at its, at the lesser price, right? So, for example, right now Nifty is at 21,650 or 21,698, 21,700. Imagine Nifty falls by 200 points. I can then buy Nifty at 21,500, which is much better than 21,700, right? So that's the overall idea here. Because you have your cash secured put will sort of start giving you good returns. So let us see how this goes. And before we get there, I'll talk about what to do next. So, for example, by the end of the expiry, if your Nifty is above Nifty current price is above the strike price, then you continue selling the put options. But if at expiry the Nifty is below the strike price, right? Your strike price here is 21,650, then you will buy Nifty Bs and close the put option, right? And now your cash will be used up to buy Nifty Bs, all right? And then we will see what is the next leg of the week. So this is the idea. Let's do some back testing, okay? So I'll go to the end of the day here, and then we'll sort of move to the next day. So we are now on Tuesday, Jan 2nd, 3:30. Actually, I've not done this back test before, guys, so it's not like I've set it up. In fact, I've done the back test for May, June, and July. I know how those 3 months go. But for Jan, February, and March, I haven't done it. And as a part of my research, I thought I'll do it, but might as well do it on camera, right? So we are already in a profit of 300. That's not too good, not too bad. Now the market has gone down a bit, so now we are in a loss of 3,350. Okay. The next day the market has gone up, and this is the expiry. So we'll basically now check. Our strike price is 21,650 according to our rule. If Nifty is above the strike price, and the strike price is 21,672, which means Nifty is above the strike price, you just continue selling puts, right? So you will be booking your profit here from this leg. You can just go ahead and book your profit. Just give me a second. I'd rather, let me just cut this out. All right. I think this one's a little better, right? So now coming back to this, I will just exit my put. Okay. In fact, what I can do, guys, is maybe let's just close out this. I'll open the weekly option 2024. Oops, just a second. All right, perfect. So yeah, I'll just open it in a different tab instead. I think that'll be easier. So the first week was good. We have made a profit of 4345. That's lovely. So let us go key that in 4345. And now this is going to give us the cumulative profit, right? So let's move on to the next week. As we saw, because Nifty is higher than our strike price, which is 21,672, higher than the strike price of 21,650. Let us move to the next week, right? So I'll be clearing all of this. I'll move to the next week. So you can also do this overnight, but I'm just choosing to do this at 9:30 in the morning. All right. So just give me a second. There you go. Now let's check. Nifty is at 21,726. Perfect. Sell slightly out of the money put option. Okay. Which is what we did. Move to the end of the day. Then do run. So you are in a loss by the end of Monday. You are still in a loss by the end of Tuesday. Wednesday, slightly in the profit. And again, Thursday, you ended up with a little profit, that is 2370, which is not bad. Again, let's make a check for our thing. So your spot is 21,651. Your strike price is 21,700. So your strike is actually below your PE. Now, according to our logic, what we can do is, just give me a second. So it's 23,700. So according to our logic, what should we do? Because the Nifty is below the strike price, buy Nifty and close the PE option and then move to CE selling. All right. So this is what we are going to do now. Just give me a second. All right. So I'm back. Fantastic. So I do hope that you guys are able to see my screen.